Could President Trump's new executive order change the way Americans drive forever? The electric vehicle, EV, market has been growing rapidly, thanks to government incentives, emissions regulations, and global investment in clean energy. But with Trump's latest executive order aimed at cutting EV-related mandates and subsidies, the industry could be facing a major shift. What does this mean for automakers, consumers, and the future of electric cars in the US? Let's break it all down in detail. Repeal of the EV mandate. While there has never been an official EV mandate, regulations under President Biden's administration were designed to push automakers toward producing more electric vehicles. Stricter emission laws made it nearly impossible for car manufacturers to meet environmental requirements without significantly increasing EV production. Trump's executive order is set to roll back these emissions targets, allowing car companies more freedom to produce traditional gas-powered vehicles. Without strict emissions regulations, automakers may slow down or even halt investments in electric vehicles. Many car companies, including General Motors, Ford, and Volkswagen, have pledged to transition toward all-electric lineups, but these commitments were partly driven by government regulations and incentives. With those incentives removed, some companies may shift their focus back to gas-powered and hybrid models instead. End of EV subsidies. One of the biggest draws for electric vehicles has been the federal tax credit of up to $7,500, making EVs more affordable for everyday buyers. If Trump follows through with ending these incentives, electric cars will become more expensive, potentially reducing demand. Consumers who are considering switching to EVs due to lower costs and environmental benefits may now reconsider. Without subsidies, EVs will have a higher upfront cost compared to traditional gasoline-powered vehicles. This could particularly impact middle-class buyers who rely on tax credits to make EVs affordable. Moreover, the loss of subsidies could affect EV resale values. Many consumers purchase EVs expecting future incentives to help maintain their value, but if government support disappears, depreciation rates may increase, making them less attractive investments. Halt of the national charging network expansion. Another major setback for the EV industry is Trump's decision to halt federal funding for a national charging network. Under Biden, billions of dollars were allocated to expand charging stations across the US, making EVs more accessible. Without this investment, charging infrastructure may struggle to keep up with demand, discouraging consumers from making the switch to electric cars. The charging station network is a crucial component of EV adoption. A lack of public charging stations could create range anxiety, where consumers fear they won't be able to charge their vehicle on long trips. This could reinforce the preference for gasoline-powered vehicles, particularly in rural areas where charging stations are already sparse. Additionally, private companies may hesitate to invest in charging infrastructure without government support. The expansion of EV charging networks was seen as a partnership between public and private sectors, but without federal funding, the burden falls entirely on businesses, potentially leading to slower growth. Impact on Tesla and other automakers. Tesla, the leader in the EV market, could face significant financial losses due to these policy changes. Tesla earns billions of dollars from selling emissions credits to other automakers that struggle to meet environmental regulations. If those regulations are rolled back, traditional car companies will no longer need to buy these credits, cutting off a major revenue stream for Tesla. In 2023, Tesla reported that nearly 40% of its profits came from selling emissions credits to other car makers. Without these regulatory pressures, companies like Ford and General Motors may abandon their plans to aggressively expand their EV offerings, reducing the demand for Tesla's clean energy credits. Additionally, if tax incentives for EV purchases are removed, Tesla's vehicle prices could become less competitive, forcing the company to adjust its pricing strategy. While Tesla CEO Elon Musk has stated that the company can thrive without government incentives, the overall shift in policy could still impact Tesla's market dominance and growth projections. Energy industry's influence on EV policy. Trump's executive order not only reshapes the EV market, but also intensifies the long-standing battle between the fossil fuel and renewable energy industries. The oil and gas sector has consistently lobbied against EV incentives, arguing that such subsidies create an artificial market advantage, distort free market competition, and unfairly burden taxpayers. Their stance is that government intervention should be minimal, allowing consumers to choose vehicles based purely on price, performance, and preference, rather than policy-driven incentives. By rolling back EV-related policies, Trump's administration aligns itself more closely with traditional energy sectors, which could result in increased domestic oil production. This move could encourage more drilling, expand U.S. energy exports, and potentially drive down gasoline prices. Lower fuel costs often reduce consumer interest in EVs, as gas-powered cars become a more economical choice. Historically, when fuel prices drop, the demand for larger, less fuel-efficient vehicles like SUVs and trucks rises, while interest in EVs tends to decline. This dynamic could stall EV adoption, especially in markets where affordability is a primary concern. However, the implications extend beyond just consumer choice. Lower gasoline prices could also impact automakers' long-term strategies. Many car manufacturers have made substantial investments in EV production to comply with emission standards and meet growing global demand. A shift away from EV incentives in the US could force companies to reassess their strategies, potentially slowing EV development and innovation in the country. On the other hand, renewable energy advocates argue that cutting federal EV incentives and infrastructure investments could severely hinder progress toward a cleaner, more sustainable transportation future. They emphasize that government support is crucial in the early stages of technology adoption to counterbalance the entrenched dominance of fossil fuels. Without federal backing, the transition to electric mobility could slow significantly, leading to continued reliance on oil and increased carbon emissions. Will American automakers fall behind on the global stage? The global auto industry is moving toward electric vehicles, with countries like China and those in Europe heavily investing in EV production and infrastructure. If the US steps back from EV development, American automakers could find themselves at a disadvantage in the global market. China, for example, has implemented aggressive EV policies including government subsidies, research and development investments, and infrastructure expansion. Chinese automakers such as BYD and NIO are rapidly scaling up their production, with some models already competing with Tesla in international markets. Meanwhile, the European Union has set strict emissions targets and plans to phase out gas-powered vehicles in the coming decades. Automakers operating in Europe must adapt to these regulations, giving European companies a technological and competitive edge. If US automakers reduce their EV focus, they'd risk losing market share in the global industry. International competitors could dominate the EV market, while American companies struggle to catch up in the future. What's next for EVs in the US? Trump's executive order marks a major turning point for the EV industry in America. With subsidies potentially ending, regulations easing, and charging network expansion slowing down, electric vehicles may face an uphill battle. However, the demand for cleaner and more efficient transportation is unlikely to disappear completely. Many states, cities, and private companies remain committed to electric vehicle expansion. Additionally, consumer interest in EVs continues to grow, particularly among younger generations who prioritize sustainability. The question remains, will automakers continue investing in EV technology despite these new challenges, or will the US fall behind in the global EV race? As the debate continues, one thing is clear. America's electric vehicle future now faces an uncertain road ahead. If you found this breakdown informative, make sure to subscribe for more insights on the latest policy changes and how they impact you.